Hey, I'm Bill Fanter, founder of Options Action, and you're watching the weekly watch list. If you'd like to get access to this content before it goes live on YouTube, just hit the first link in the description to sign up for our free weekly emails. All right, let's jump right in. Welcome back, everybody. This is going to be the watch list for Monday, August 25th. Let's go ahead and take a look at the economic calendar. So for the upcoming week, we don't have a ton of news until the latter part of the week. But on Monday, do note we have new home sales. So we're going to want to keep an eye on this to see what's happening with housing. Single family residential has been down exponentially, but what has been on the rise for not only sales, but new construction permits has been multifamily housing. So think renters, right? The rental market is still very strong, primarily due to the fact that home prices since COVID have essentially doubled and mortgage rates are still well north of 6.5 to 7.5%, depending upon obviously credit, LTV, and where you live in the country. Now, also on Friday, you saw that Jerome Powell hinted, he didn't commit, but he hinted that it might now be time to start lowering rates. Well, just because you're going to lower the FOMC rate or the Fed funds overnight rate does not mean that mortgage rates are going to automatically come down. There is not a direct correlation between the Fed funds rate and long-term mortgage rates, right? Mortgage rates are driven by the bond market, so you have to watch what the bonds are doing. So just be aware, Monday, 10 o'clock a.m., probably don't be in a position. You'll get some volatility. But then coming in on Tuesday, we have durable goods orders, and then we have more home price index. Now, we are seeing home prices come down across the United States. So they are well off of the highs, and that has to do, again, with inventory build, right? So if mortgage rates are staying high and people are deciding to sell, there's more inventory on the market, but there is less buyers. So think supply and demand. So therefore, you have to reduce your price in order to get the sale complete. We have consumer confidence on Tuesday at 10 a.m., nothing on Wednesday. And then this is where things are going to really start to, rubber's going to hit the road yet again. And this will be more of a dovetail into, well, what does the Fed do in September? Now, the market is pricing in a 25% basis rate cut. So that's pretty much right now a given. Now, if they don't do it, you're going to watch and see probably a massive sell-off after the huge run-up on Friday. And we'll take a look at that in a minute. So we're going to want to still keep an eye on jobless claims, right? Are jobless claims going higher or are they going lower? And then what is going to be the revision of GDP? So this is going to be important, not only from an inflationary perspective, but also Thursday from an unemployment perspective. Friday, we have a lot of numbers coming out: personal income, spending, the PCE index, the core, trade balances, retail inventories. Now, with a lot of the retail companies that have been announcing earnings last week, they are all saying that tariffs are having a marginal impact on their business thus far. The largest one was Walmart. Now, what they did go ahead and speak to was the fact that they are eating that tariff cost into their margins, which is why you also saw, even though Walmart beat on the top and bottom line, the stock sold off 5%. Again, we've talked about this in prior weeks, right? Tariffs are going to get paid. They're going to get paid by one of two people. I'm going to say this again for the 100th time. Other countries do not pay our tariffs, right? Our importers pay the tariffs, and they got to do one of two things. One, they're going to eat it as part of their margin, or two, they're going to pass it on to the consumer. Now, if they pass it on to the consumer, that's what causes inflation to rise. If they decide to eat it into their profit margin, that reduces their overall future profitability, which goes into the valuation of the stock. So let's think about this. If margins are compressing for importers, anybody who's buying anything from outside of the United States, and they are not increasing the cost to their consumer because they're trying to hold market share, right? They don't want to lose market share to a competitor. The market in general is extremely high priced comparative to historical averages. we are trading at 25 times forward earnings. So that means revenue has to keep going up going forward into 2026, 2027, so on and so forth. So if you start to see companies' earnings come in as a result of tariffs, then the market can't sustain a 25 PE. It has to come down, which is what we saw happen over the last several days. We'll also have consumer sentiment and wholesale inventory. So Friday's going to be a big day. So that one is where you're going to want to be a little cautious. Good news is pretty much all of that data is going to drop in the morning before the market even opens. So let's take a look at the ETFs. We are now in SPY back at all-time highs, right? This was just that God candle, quote unquote, that as soon as the market got a hint that Powell was even willing to reduce rates, didn't even commit to it, it just took off. And you could not catch this candle under any circumstance. And it literally pushed pretty much up to these prior all-time highs. I would not be chasing this. Personally, I think all the good news is baked into the market from an overall SPY perspective. I would definitely be looking at, though, individual names. And I'm going to kind of show you that what happened here was an overall broadening of the market. Right? We've talked about this in the past. They can't keep piling into Apple, Google, Meta, Microsoft, Tesla, Nvidia to get the market to go to new all-time highs. Other sectors have to start participating, and I'm going to take a look at a couple of those this morning. So SPY, here's your price levels. You could go ahead if you want and throw a new all-time high here, but this is an after hour, so I'm not always a huge fan of that. Just because it could push up on very low volume, but 646. So you want to watch to get above, retest to actually go higher. Okay. QQQ, let's take a look at that. Now, this one, interestingly enough, we are not back at the new all-time highs, right? We're at 583. We're still at 572. Again, nice, huge green candle on the buying, but this goes to show what I just said is that if you want newer all-time highs in the market overall, it just can't be these 100 stocks, because they are pretty well priced on a forward earnings multiple. So look at some of the individual names, and I think you'll find this intriguing again. Apple, we got some really great price levels here. Keep an eye on this one. I would want to see a pullback to 225.70 before I would go long. Possible reject up at that 230 level. You can see how they rejected it here, bounced it here, rejected it here, bounced it down here, right? We do not want to take a trade between these two levels. It just doesn't, well, you can do whatever you want, but to me, it just doesn't make any sense, right? I would just sit on the sidelines with that one. On Amazon, again, we got some good momentum, holding price. We saw a huge sell-off back here in July, all the way down to the 213 level. And now, yet again, we are trading within these price levels, right? You can literally see it, and this is what I would do. So we are right now at a price level. You're going to want to watch and see, can it hold this 228 with some momentum to go higher? And then I would be buying the 230 calls, right? This is where you're going to get some possible selling pressure, but I like calls here, and I like puts up here. Let's take a look at Microsoft. Microsoft, interestingly, is one of the ones that's not acting particularly very well. Now, this thing, again, is very rich in price, but look at where it was back here all the way up at, what is that? 560, 565, 10% higher. This was off of their earnings, and they have literally sold into it, okay? Now, on last Friday, when everything was just being bought up like nobody's business, what were they doing? They sold off Microsoft on the pop. So you could watch for a bounce here to go higher, but I think we're going to be in some consolidation range bound before we could actually move back to the upside. Let's take a look at Google. Again, Google was making new all-time highs. Yep, there we are. Wait for a pullback to 205.48, and then you could go long. We don't have any price higher than this one, so this one, again, got bid up really pretty darn good to the upside. Let's take a look at Meta. See where we're at here. Again, we had a nice higher high over here at almost 800, a good buy on Friday's news, and then some follow-through of continuation. So again, if you get down to 753, sorry about that, then I would definitely consider going long. We can go ahead and fix our gap fill So I'm going to use this candle low here, which is a 731, and I'm going to adjust this down to 731 on the top side. So 731. This is how we make sure that our gaps stay relevant, right? And now we will watch this to potentially go higher to the upside. Let's take a look at Nvidia. They have earnings coming up. So this one again, acting fairly well. Really good buy. Now this is going to obviously be tied to everything that's going on within the chip sector, the tariffs, also the 15% taxation for chips being sold to China. It's just intriguing to watch all of this play out. But again, we are not back up here at this 184 level, but starting to march higher. I do like a bounce at 177. 177 has been a line in the sand for the most part. This was a prior pivot all-time high, and that they've been using this as support to actually move higher. So keep an eye on 177, 179, right? They got to get above this 179.38.89 channel in order to really push higher. AMD, on the flip side, we'll look at this from a confluence perspective. Again, a lot of enthusiasm in AMD as it got up here to 190, sold all the way back off to 160. We are finding now ourselves a pretty good base here at 167. So I do like this for calls to go higher. Not a fan of puts, right? Even if you get below 167 on some weakness, I would just wait for it to recover a level higher. Personally, don't really like shorting into a lot of demand, especially when you got 1 day, 4 hour, 1 hour. You have a lot of heavy demand on this one to the downside. The other one that's actually gaining really good traction has been Tesla, and I think this thing's going to probably shoot to the upside, and I wouldn't be surprised to see this thing run to 350, 360, maybe even 400 now that Elon is, fully back at Tesla. And look at this candle, right? I mean, this one actually gapped up on the pre-market on Friday, and then once Friday's news dropped, it really moved higher. So we got to get above, though, this 341 in order to go to 346 and then more to the upside. But this one is actually looking fairly decent, in all honesty, considering that back here in this was back in June of 23, right? They were up here at 360, and then just a lot of consolidation back and forth. Now, this one consolidates pretty wide, 10% to the upside, 10% to the downside, right? We're at 300 up to 344, so 10 to 15% is kind of the range. But I would be watching this one for a potential breakout. But we got to get above this 346 up here. And then let's also talk about Palantir. Again, one of the most expensive stocks, the most expensive stock on a forward revenue basis of just about anything. So this thing, again, we were all the way up here at 190. We're now back at 160. I think, again, market cooperates, has some good news, could definitely see a push to the upside. So when we're looking at, well, how could SPY be at all-time highs and QQQ is not? Well, it's very apparent when we just looked at each of these individual tech stocks, right? They're taking profits in tech and they are rotating to other sectors of the market. So the other sector that I just want to look at real quick, because in order for SPY to stay higher, the banks have to participate. So just a real ripper. Clearly you could see on SOFI. So this one, I would watch, can you get above 25.11? And then I think, right, this one could run all the way up to 28 and change. Now, conversely, when I take a look at Citibank at 96, I'd probably be maybe even looking to short this thing, right? So, I mean, we're going to get one rate cut, which is great, but these banks are going to run on M&A deals. So we need more consolidation within different industries. We got quite a bit of sellers up here. Again, everything, especially with the banks, got bought up. We could look at JP Morgan Chase as well. The interesting thing with this one is, again, we had a huge run up on Friday, back from this 290 up to 296. A lot of resistance up here up top. But if you're below 296 and you got a weak market, I would definitely be open to shorting this one. Let's look at Wells Fargo. This one is not acting anywhere near as well as the last two that we just looked at, but if you could hold 78.96, definitely I think we could go higher. It's going to hit a little bit of resistance right here in this area. right about here, $79 and change. So we kind of really need to, I would actually even, yeah, right in here, right in this area. You got to get above this, $79, $80 range. This would be your safest zone to go long. Get above, $80, right where this candle high is. But otherwise, I think you're going to get a little bit of resistance. And then the other thing I don't like with this one is look at where this high was at 84. Now, again, we're only off by 5%, but the banks are intriguing because we're getting quite a bit of consolidation. But the hard part with them is that when the economy goes south or unemployment goes up dramatically or inflation goes up dramatically, the banks take the hit. And they take the hit harder than most because think about it. If economic pressures are tightening, well, what's going to happen? People stop paying their mortgage. They stop paying their car payment. They stop paying their credit card. So their losses, their loan loss reserves go up, which means money comes out of their overall net income reportings and it stays within the bank. So it doesn't get dividended back. They don't use it for infrastructure build. They don't use it for technology. Same thing here with Bank of America. We are back to, looks like pretty much all-time highs. Just double check this. Yep, $50, right? I think if they do a hard push, but this is, again, another great example that when we can get all the way up here to $50, and again, this was back in 22, so it's been a long time, all the way down to 25. I mean, these things will take a haircut by 50% in really challenging economic times. We could see the same thing back here when it was at 35 in 19, right? And then COVID comes around and we're down at $18, okay? Great recovery, great stories, but you buy these things on the dip. In my experience, you do not buy them on the breakout. So I really probably would not be buying Bank of America. If anything, if you own some stock in Bank of America, sell some out of the money covered calls, okay, and protect yourself. But if we can come down here to 49.31, again, 20 cents away, take it for the bounce, play it higher. And those are all the things that I'm looking at. So with that being said, cannot promise you that you will see a weekly watch list for the next 1 to 2 weeks, as I'm going to be heading out to France and Italy for a 3-week vacation to just enjoy some time away. And the beauty of trading is, right, you can do it from anywhere in the world, and you can make insane amounts of money, and then go spend that damn money, right? Don't just keep saving it and squirreling it away and, waiting for retirement, because tomorrow is not guaranteed. So with that, everybody, I am grateful and appreciative for you watching this, for learning, bettering yourself, and learning a skill which not everybody takes the time to do. And then finally, I will be back by September 15th to finish up the final masterclass of 2025, and then I will not pick up another one until 2026 because we got some cool things planned for the Discord community. So with that, everybody, have a fantastic Sunday fun day, and I will see you all shortly. Take care. Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly watch list emails to get early access before the video drops here on YouTube. See you next time.